Hello and welcome to the weekend update for the week starting November 28th. So let's see what we got going on in today's video. We are going to take a look at earnings. There's more earnings this week than last, which is a weird way for earnings season to wind down, but because of the holiday weekend or holiday week last week. We've got some more interesting, a number of interesting stocks have earnings this week. We've got a huge macroeconomic week. There's so much going on. It is a big week. So we'll take a look at that. On the global stage, there are some really interesting protests going on in China regarding COVID. Some unusual stuff going on, which I think could, if these protests continue or spread, could become a real macro catalyst this week. So we'll be watching that closely. We're looking at markets. We're nearing resistance. Can they break on through? Is it time for them to roll over or rest a little bit? With all this macro econ this week, it's really tough to say what's going to happen in the markets. We'll take a look at our setups. We'll take a look at last week's setup. We were looking at Monster, Boeing, Google, GFS last week, and we'll look at some new ones. Some interesting setups in Costco, GFS, ISRG, I think Intuitive Surgical, I think that is, and Meta. So let's get right into this. So hey, if you don't mind, go ahead and smash that like button. And we will move right along and take a look at our disclaimer here. So everything we do here is for educational purposes only. We're not investment advisors, do not provide investment advice. All trading and investment decisions are your own and done at your own risk. Okay, so here's our earnings calendar for the week. Not terribly much that's interesting on Monday. On Tuesday, we have Billy, which I think is kind of interesting. We also have Scotiabank. Now, if any of the Canadians who are here, probably have this, and if it's not in a Canadian ETF that you're holding, you maybe have a direct holding in Scotia in your account. You certainly have. In your long-term account, I'm sure that if you've got a Canadian dollar account, you've got one of the big banks anyway, one of the Canadian big banks. So we've got, this is the first of the Canadian banks. It's reporting on Tuesday before the open. Canadians may also be interested in Shaw, but maybe not as much. Shaw is the big cable company in Canada. On Tuesday after the close, we have CrowdStrike. That is very interesting to me, and I know some other people in the Discord. Some people may find Intuit interesting. I don't. XPeng, I think on Wednesday before the open will be interesting. After the close on Wednesday, Snowflake, that'll be closely watched for sure. And Salesforce as well. We could be saying how the mighty have fallen here. So it'd be really interesting to see where this goes. Some other sort of second-tier names as well later on Wednesday. On Thursday before the open, we have Dollar General. Now, remember, we had Dollar Tree, I think it was last week. So there probably won't be any big surprises here. But, if they don't come in sort of in the same general area that Dollar Tree did, then we could see some movement in this stock. We also have Kroger on Thursday before the open, and you can see also lots of other Canadian banks, Bank of Montreal, BMO, TD, CIBC. So big week for Canadian banks. On Thursday after the close, we have Ulta Beauty. I know that we were talking about this in Ticker Talk last week. ChargePoint, I think, could be interesting, and Marvell's one of the chip stocks that is reasonably closely watched. So some interesting stuff coming up this week for earnings. All right, let's take a look at this. What's going on in China? So coming this week for our economic data. So on Monday we have some Fed speak. and that includes Bullard. Now, Bullard the market always seems to react strongly to what this guy says. Number one is Jay Powell, of course, and number two is pretty much Bullard. So he's being interviewed by MarketWatch on Monday. So this could very well move markets. It'd be really interesting to see what he has to say. On Tuesday, we have consumer confidence. This is one of those reports that obviously we want to have the consumer have some confidence. It's good for the economy when the consumer is spending money. However, we don't want the consumer to be too confident because that would be inflationary. So one of these reports where we kind of looking for a Goldilocks number. And on Wednesday's just a huge day. I could have listed 3 times as many things for Wednesday, but first up in the morning we have preliminary GDP. Now this is the second GDP report for the second quarter. We have JOLTS job openings. So that'll be interesting because later in the week we've got more jobs numbers. So this is kind of an early look at what those jobs numbers might look like later in the week. And then later in the day after all of this, we have Jay Powell is speaking about inflation and the economy, and I'm sure he'll be yapping his head off. And that is later in the day, and that will no doubt move markets. So that makes Wednesday a very interesting day. Thursday, we have the PCE price index. Now, core is the one that the Fed watches most closely, and PCE is what they say that they watch much more closely than CPI. So this is PCE stands for personal consumption expenditures, and again, Fed's favorite number for inflation. So market will be watching this very closely on Thursday. Also, another big number on Thursday is ISM Manufacturing PMI, the Purchasing Managers Index. On Friday, as if all of this wasn't enough, on Friday we have non-farm payrolls, which is always huge, always market moving. And then we have, and along with that comes, the unemployment rate. Now, we want to see the jobs market softening, or maybe we don't, but Jay Powell and the Fed wants to see the jobs market softening. So, this will tell us if it's softening or not. So, everything we've got going on this week has the potential to rally the market. It also has the potential, to for the market to dump on it. Considering, that we've had, a decent CPI number recently, I think there's potential here if this data backs up what we've seen in the last couple, we've had a couple of decent economic reports that show that inflation is slowing. If this can back it up, I think this could lead to a really strong rally in the market. So this week is a real inflection week. But we've got to be careful about getting ahead of ourselves because the really big number comes on Friday, and that's critical. If we rally, say, after Jay Powell speaks on Wednesday, or if we rally on GDP or PCE on Thursday, and this non-farm payroll number comes in hot, that'll kill any rally in its tracks. So it's definitely a week for us to be really careful and be aware of what's going on in the markets, with all this macro. And then, complicate matters a little bit. We've got, what's going on in China over the weekend with these protests. So, they're protesting COVID and, COVID zero policy and lockdowns in major cities across the country. Protests against strict COVID measures in China spilled into a second night and spread to the biggest cities. I think this all sort of started. There was a fire in a smaller city somewhere, and apparently the fire department or firemen were on lockdown. So this fire spread and killed 10 people because the fire department took forever to get there. Really unusual situation, and that's apparently what started all these protests that are now spreading. Demonstrators gathered in the capital of Beijing and the financial hub of Shanghai. So yeah, I mean, the two biggest cities, two most important cities in China, are having protests, and they spread beyond that as well. Some have, however, gone as far as to say, or as far as calling for President Xi Jinping to step down. This is really unusual, and you would think would bring out, massive police presence, against the protesters and mass arrests, and that doesn't really seem to be happening yet, anyway. But this, calling for Xi Jinping to step down is huge, in my opinion. And if that sort of thing starts to spread, I mean, we could see a massive crackdown. Or who knows? This is the thing, right? I mean, when you've got something like this going on, it really kind of like we're really guessing on where things could go next, and it really could go any which way, and it really could affect markets too. No doubt it would affect markets in China, but it could also affect markets internationally. So I think this is a story that's going to be playing out this week, and we need to watch this closely as well. All right, let's move on to the markets and see where we're at there. I want to start by looking at the weekly charts. We probably don't zoom out enough, which is all totally my fault, of course. I do have a habit of getting into the micro and not looking back and really sort of simplifying the charts. So what we're looking at here is a chart of the Dow Jones Industrial Average. This is a weekly chart. And I've pulled all the lines off it, except for one trend line. And that would be this downtrend line that started at the beginning of the year. And you can see that in the last few weeks, we have broken through that downtrend line and are moving up away from it. This is great. This is what we want to see. When we see the Dow is only about 5% off its, or down 5% this year, and it's about 7% off the high for the year. Not that bad, but can the Dow hold up the entire market? And I really wonder whether that's possible. This is great. Everything we're looking at here is great, but the Dow can't do it on its own. So the next best performing market is the S&P 500, SPY. So we'll look at a weekly chart there as well. And also, these moving averages you see, the blue one is a 21 week exponential moving average, and the green one is a 50-week simple moving average. So, about a year on that green one. Now we can see, obviously, we're in a downtrend from the beginning of the year. The S&P 500 is still down about 15% on the year. But we are coming up into that downtrend line. We have kind of paused here a little bit for a couple of weeks. And are we getting ready to go up and and try and break through this? We haven't been able to the last couple times we were there. Maybe this time is different. So this is interesting to keep an eye on. Now our next best sector or index, is the IWM, the Russell 2000 small caps. And you can see that this is right under its downtrend line, right under that 50-week moving average, and tagged that week before last. Pulled back a little bit, but is now being supported by that 21-week exponential moving average. So this is really interesting. We've got a bit of a consolidation going on here, right under resistance. We like when we come up into resistance and then go sideways a little bit, because it improves our chances of breaking out to the upside. So I think IWM is going to be a really interesting one to watch this week. And of course, if we look at the NASDAQ, this is the weakest of them all, and you can see, we're quite a ways from that downtrend line, still under the 21-week moving average. consolidating for a couple of weeks after a big green candle. But this one really has some work to do. We need to see that move to the upside. So, that's our sort of big overview, and I think it's good to do this once in a while, and don't forget to do this even on the individual stocks you look at. Always a big fan of, starting at the weekly chart or even the monthly chart and moving down into the lower time frames. All right, so let's do the same thing again, pretty much, but looking at the daily charts. So we'll start with the SPY here, and you can see we've got the 200-day moving average just overhead. Some major support resistance levels here. We've got these gaps that go back. I know this chart is starting to look kind of messy, but there's a lot going on here, right? When we're going back and trying to move through all these levels that have been important in the past, so it does kind of mess up the chart a little bit. You've just got to be able to sort of look through that stuff. It's an interesting place to be with all this that's going on this week coming up. The chart is showing that basically. Which was a very indecisive little candle from last week. And sorry, we have the green. I'm not sure why this is showing us 1 day's worth of candle here. That's interesting. Oh, sorry, Friday, the short day. Right. Got lost here for a sec. Sorry about that. But yeah, so, we've moved up a little bit. It looks like we may consolidate sideways here, but, with everything we've got going on, I mean, could go anywhere. And I'm not going to speculate. I'm just going to say that, there is some resistance overhead, but we have been moving up nicely. So it feels like we should be going higher, but we need help from that economic data that we're getting. Same thing's going to go for the Qs. They broke out of this little bull flag. Haven't had a whole lot of momentum to the upside yet, and still have a whole bunch of resistance overhead, but also have support below, right? Let's look at IWM, the Russell 2000 small caps. And we see this is holding its uptrend nicely. It's started to develop a nice uptrend channel, but we are coming into resistance. We're coming into that downtrend we looked at earlier off the weekly chart. So be an interesting week here. Can we get through this resistance? And I think that, the big one here is going to be this 200-day moving average. I think we've got a shot. If this economic data comes in nicely and the market rallies, we've got a shot at getting through that 200-day moving average and holding above it, which would be huge for the market. All right, let's take a look at the VIX. VIX is pretty much doing what it needs to do. We've been coming down a lot. It seems to be finding support just above the 20 level, that very important psychological level here. But did just this last week, it closed this gap. So I think we can take this off the chart now. See where we go from here. It'd be nice to see this roll over some more. That would really help the market rally. And if the market does rally, we will definitely see this pull back and probably come down below the 19 level, below these lows right here. Let's look at the 10-year yield. So this is breaking down out of that bear flag, exactly what we expect to see. Be nice to continue to see this move down. We're probably almost definitely going to find some support here at the around the 3.5 level. We've got the 200-day moving average coming up into that level as well. Let's take a look at the dollar index. Okay, so the dollar, we had a nice strong pullback in the dollar, a little bit of a bounce, pulling back again, finding some support here at the 200-day moving average and this support level. Not terribly surprising. We don't really want to see the market or we don't want to see the dollar go up if we want the market to go up, though. So it'd be really nice to see this roll over some more, and especially break down through that 200-day moving average. Let's see. Oh, let's look at some breadth here. We'll go over here. All right, so this is the percentage of all stocks above their 50-day moving average, or all U.S. stocks. And this has sort of consolidated in here and looks like it's going to be moving higher. It's nice to see this spending some time here. Quite often when this has got into these levels, it's immediately turned around, as you can see here. It's not doing that. Looks like it wants to continue higher. That's great. Let's look at the percentage of stocks above the 200-day moving average. Now that's only around 46%, but again, we're up on levels we've only seen a couple times this year, and we look to be going higher. We haven't turned around when we got into those levels. We are moving higher, so that's really nice to see. And finally, we'll look at the S&P 500 stocks above the 200-day moving average, and we are now above these previous highs from earlier in the year, trying to go and attack the highs from very early in the year. This is nice to see. We had a bit of a pause and we are moving higher here. We're up to now 61% of S&P 500 stocks are above their 200-day moving average. Things are, when we're looking at breadth anyway, things are looking less and less bearish here and more like a bottom is in. We're not out of the woods yet, and this is a critical week, like I've said earlier, but things are looking good here. Let's take a look at our DCA timing tool. We can see, we turned green a few weeks ago on the S&P 500, so all systems go. It's nice to see this is holding above its 20-week moving average. Let's take a look at the Qs. See if these have turned green yet, and no, they have not. You can see that the MACD crossed over a couple of weeks ago, but we have still been unable to retake this 20-week moving average. Looks like it could happen any time now. And again, if we get some decent economic data this week, this will break out above this 20-week moving average and turn this green. And IWM should still be green. I see no reason why. Whoops. See no reason why this one wouldn't continue to be green. Okay, yeah, and we're hovering above that 20-week moving average. Be nice to move away from that a little bit, but the MACD is opening up nicely here. So, this is starting to look stronger and stronger in here in the IWM. So, if you're dollar cost averaging in any of these indices, all systems go on the SPY and IWM, and quite possible that the Qs turns green this week also. All right, let's go back to our E-signal charts and take a look at gold. Gold is looking pretty interesting here, I think. So we had a really nice move up. We had a pullback, should be expected, and especially from resistance up around this 1800 level. And then we had a really interesting day on Wednesday. Nice reversal day on Wednesday after touching the 21 and 100-day moving average, and we moved right back up into some resistance. You can see that 200-day moving average right there. It really looks like gold wants to move higher here. So that's quite interesting to see, and I did actually enter this week some materials plays. I'm getting a little bit of metal in that materials play, but it's just an ETF, the XLB ETF. Didn't go for XME, which is the metals and mining. Probably should have, considering that what we've seen. But this is earlier in the week, and gold was still declining. So maybe take a look at that metals and mining, and we'll definitely be taking a look at some of the miners. Speaking of which, GDX. These are the larger cap gold miners, and you can see that this is now breaking out here. This is above its 200-day moving average. Had a little bit of a pullback on Friday, but it's a short day. You got to kind of almost ignore that last candle there, because we had a couple of nice days here. So the miners are telling us that gold is going higher. Silver. Silver is, what's interesting about silver is silver turned before gold did. Okay, so look at here, 1, 2, 3, 4 days ago, right? We had that reversal candle, and I think gold was what, 2 days ago or 3 days ago? Yeah, just 2 days ago was the reversal on gold. So silver gave us some clues here that a turn was happening. So is silver going to lead this? And is this red candle here something to worry about? Now silver hasn't, moved up to its highs yet either, but yeah, it'd be interesting to watch silver. It does seem to be leading. Watch this for clues if you're playing in this space. Copper, not so good. Has made a little bit of a turn, but this looks more like a bear flag to me than a turn that is going to continue higher. And with this unrest in China, it'll affect copper more than any of the other minerals, any of the other metals. Just let me. I want to highlight this this bear flag or this rising wedge that we're seeing. Oops. That's a little more like it. Yeah. Okay. Yeah. So we expect to see this break to the downside. If it does break to the downside, do we find support at this uptrend line here, or at the 50-day moving average, or the 100-day moving average, which is right there? And I suspect we might. But the measurement, if we were going to measure this bear flag, that would take us down a ways. Let's see, grab that. Let's do this real quick. It takes us through a bunch of support levels and down into testing these lows here. I kind of don't think it's going to go down that far. I think that, unless the situation in China just gets completely out of hand, and then, everything is kind of off the table for a little bit. If that happens, I think in equities as well, even North American equities. So let's take a look at the general commodities ETF. This is getting, just continues to be kind of messy and rolling over, and that's because crude oil is rolling over and looking kind of weak here. We're right back to this pivot, that we were back earlier in September. Any attempt at moving higher is gone now. We were firmly in a downtrend over the short term and the medium term. So it's going to be really interesting to see over the next couple of days what happens here. And unrest in China would presumably, I expect, lessen demand for oil there. Especially if lockdowns get more serious, and will the government there use lockdowns as a way to prevent protests? They've done it before. I don't see why they wouldn't do it again, and that will negatively affect the price of oil. On the other hand, we've got the the Group of Seven, with their Russian oil price cap thing that goes into effect on, or they want to go into effect by December 5th, because oil embargo comes off the table on December 5th. So there's some complexities there with the price of oil and Europe and the Group of Seven with this Russian oil price cap thing. So that's a little up in the air. So oil will definitely be reacting to this news, and it sounds like they're getting really close to an agreement on this price cap. So that will definitely be a catalyst for oil. Moving on to natural gas. You can see that natural gas has been in a nice uptrend, pulled back from this resistance level, which isn't too surprising. So we'll have to see, how deep does this pull back? Probably, only to this uptrend line, which we should draw in. That uptrend line could look something like that. You could actually tighten it up, perhaps, maybe make it look something like that. Actually, I think I like that one better. So yeah, we'll see. We definitely should have some support in this area, so that's about 650 on that. XLE, the energy ETF, is having trouble getting through this former all-time high. That goes back to, that one's from June. We have a new all-time high here more recently, but we're getting a little choppy in that area. And if oil is going to be rolling over, then we should expect this to roll over. XOP Very similar, not as strong as XLE, but still, trying to hang in, looking indecisive. We need some, again, this is going to pick a direction, I think, when the Group 7, the G7, makes up their mind about this Russian oil price cap. OIH, pretty much same deal here. Trying to find some support here. Had a really nice looking reversal candle, but that kind of, that's almost negated itself now. 10, solar. So this is interesting, and again, considering that so many solar panels come out of China, does unrest there affect this space? We've got a nice kind of, pennant forming here. It's a little wide for me to, call this a bull flag. I just prefer to call it a pennant, but still a continuation pattern, and we expect to see this breakout to the upside. We have seen First Solar kind of leading the way here. First Solar broke above, its all-time high, and has been grinding higher for the last week or so. End phase hasn't broken out to new highs yet, but it's really threatening to. It's kind of trying to, moving up under this resistance level, putting in some tighter bars here. This looks ready to go here. Could go as early as Monday. Maybe we get a couple more days in here. If we get a couple more days in here, I'll definitely play a breakout in that. I'm not entirely sure I'm ready to play this breakout just yet, though. But getting really close here. XLY, consumer discretionary. Messy, weak, under a bunch of declining moving averages, although most important right now is the declining 50-day moving average above, and then we've got the 21-day moving average below, so we're kind of squeezing between those. We got a very indecisive day on Friday. No, not surprising really. Friday's, half day, no volume. But are we breaking through this downtrend line? Do we update this downtrend line, to look something more like that, right? It's generally bullish when you have to start doing that with your trend lines. But this has got to break through that trend line now and start moving up and attacking some of this other resistance over here. There's a lot of overhead here on this. So not out of the woods on this consumer discretionary. Industrials, we were watching this base build here, and you can see that we've broken out of that nicely. We're, hugging this trend line nicely. Everything looks good here on industrials, except maybe, momentum. You kind of want momentum to be a little stronger coming out of this. But, holiday shortened week, right? Low volume and everything. So have to see what happens, this week when the volume comes back in. Do they keep buying this up? Financials. Very similar kind of thing going on in financials. Just barely breaking above this pivot now. Behaving on this trend line really nicely. It's above all its moving averages now. So yeah, things are looking good here, financials, except that we've got a fair bit of resistance overhead, so there is definitely work to do. Technology. This is probably a more interesting sector, to most people here, and we are, hugging right underneath this this downtrend line. But we look ready to break out here. This could easily go higher. Let's see, communication sector. That broke out of its little bull flag or declining wedge, exactly what you expect to see happen, except that, not a lot of momentum coming out of here, and kind of a weak day on Friday in here, but again, it was Friday, it was a half day, everybody, nobody's around. Certainly nobody, look at the volume, really weak. Nobody was around buying XLC, that's for sure. This could easily break out of here and make a big fast move up into this level at around 53. I think we'd all like to see that happen. Meta, actually we'll take a closer look at Meta in a few minutes because this is one of the setups. This is looking kind of interesting here. Apple. Apple's kind of messy, not surprising with everything that's going on. You surely have heard about the riots at the Foxconn factory, and I doubt that things are getting much better there. And with everything that Apple has going on in China, they're going to be really affected by the by the macro events in China. So tough call on Apple here. I kind of suspect we see Apple on Monday come down. How far down? Hard to say. 144, 143, and in this support area here, or does it come down farther? Hopefully not. If it breaks through this support, it's probably going to be bringing the market with it. Amazon. So Amazon. Oh yeah, we were looking at this at Ticker Talk on Wednesday, and kind of mapped out one potential path here if you're bullish on Amazon. This is a brand new trend. It's only got 2 points, right? So we can't trust what I've drawn here, but this is one potential outcome. The other is that it breaks down through this new trend line and comes and tests this this low from back earlier in November, and this low, and this support level that goes way back in time. This is, I think, goes back to COVID, yeah. And pre-COVID, the support level. So we do not want to see it testing this level again. So move to the upside is definitely what you want to see in Amazon. But I think that, as much as I've drawn in what, potential upward channel here, I think this is going to go up and start consolidating sideways for maybe months, quarters even. Okay, Amazon. Okay, Netflix. Netflix is interesting. So Netflix now has really sort of developed this rising wedge. And, a rising wedge is generally bearish. We expect to see that breakout to the downside. And I would suggest that, after coming up and testing near the 200-day moving average, near the top of this gap, no big deal that it rolled over. That shouldn't surprise us. Let's zoom in a little bit here, though. We come down and we find this trend line and put a nice reversal candle there. We've got the 21-day moving average there, that it reverses there. That should be expected. This candle we had on Friday, though, that throws this reversal into question and starts bringing the potential downside out of this rising wedge into play. And most wedges break down or break out of the wedge, whether that's to the downside or the upside, about 2/3 of the way into the wedge. And look where we are right now. I would say that's about 2/3 of the way into this wedge. So if you're long Netflix right now, you need to make a decision, I think. Are you going to close out your position? You're going to stop yourself out if we break down through here? I would say that this candle, Tuesday's candle, that reversal candle, has kind of got to be, sort of your line in the sand if we break down out of this wedge. Okay, Google. Google's another one. We'll look at this now.
Nothing's playing right now.
Sorry, that was my Google Home. That's hilarious. So you can see that we tried to break out of this bull flag. We are still kind of trying to break out of this bull flag, but it doesn't look very good for it. It looks like it really wants to come back in here. But I'm wanting to see, I'm playing this breakout here, and I've got a fairly tight stop on it. And actually, I'm going to be tightening that up a little bit even more, I think, tomorrow. Seeing what happens, seeing how the market's looking in the pre-market, I might bail out on the pre-market. Yeah, this really needs to turn. If this pattern's going to hold, this needs to turn and go up like right away. Microsoft had a flag as well and broke out of this quite nicely. Had a little bit of an indecisive candle on Friday, as many things did, which shouldn't surprise us. But yeah, this is a decent breakout out of this bull flag. Tesla. So Tesla, I know I was last week very bearish on, And, you know, of course, Tesla decided to prove me wrong, which is totally fine, right? I mean, it had a really nice bounce here. Actually, I wouldn't say it proved me wrong yet, because my thesis was a very long-term thesis, right? We were doing stage analysis last week. If you didn't see my stage analysis on Google last week, you can go back and watch that video. It's all chapter mark 2. You can go right to it. Just look in the description of that video from last week, and you'll see the timestamp on this discussion about Tesla. So yeah, it had a nice bounce right off this support level where it really needed to, but it's come up and it's now finding resistance at a former support level. So do it go sideways and consolidate in this range? Can it break through here? Don't know. It's really kind of up in the air right now. I'm just going to observe this one. I don't see any plays in here. All right, let's look at semiconductors. They continue to be messy, but we are kind of hanging in above, you know, a support level, above this trend line, but we're below the 200-day moving average. So I guess it's really not surprising. It's kind of messy. It's in this indecisive zone. But you know, some of the names there are looking slightly more decisive. Not AMD so much, but it's really trying. It really seems to be trying to hang in, but we've got some selling wicks there. It seems like every time it goes a little bit, tries to get above that 100-day moving average, it pulls back. But it is somewhat supportive here. NVIDIA looks a lot better than that, and I kind of like this. I kind of like this price action on in NVIDIA. You know, it's been drawing a base. I kind of think maybe the best thing to happen for a lot of these chip stocks is put in a more of a base, continue to go sideways for a while, build a stronger base before trying to move higher. And you know, I've kind of, you know, drawn what that may look like in NVIDIA. Another, you know, potential, and what would be an opportunity as well, I think, is if, you know, if this puts in a base, you know, a nice base or a tight consolidation inside this and then breaks out of here, that may give you a viable play. But to me, this isn't quite ready yet. I want to see a few more days and see how this plays out. XLV healthcare. This broke out of this area that we were watching quite nicely. 3 really nice updates here this past week. Good momentum. Volume was a little bit weak, but again, you know, we kind of expect that. Everything, you know, all systems go here on healthcare. I think we want to be, you know, looking for plays, especially if we get a little bit of a pullback. Now, I think this goes up for another couple of days, but inevitably there will be a pullback. Does it come back and, you know, test that level there, or does it find another level to test? You know, maybe we should be looking over here for resistance, probably up in there. Actually, I'm going to get that in. Draw this line in here. This level right in around here, somewhere we could expect to see some resistance. You know, and as far as support goes, you know, does it find support off of that? If it pulls back, it might very well do. So yeah, we should maybe start looking for some healthcare names to be buying, you know, once we see a little bit of a pullback. This has moved a little too far now for me to be really excited about any of the healthcare names. I want to see a pullback first. Biotech has not joined this party at all, but it is still hanging in, right? You know, right above this this uptrend line, but I don't know, going sideways and building a base down here. If this breaks out to the downside, it could move quickly to the downside, I think. REITs. So the defensives were kind of strong recently. And you can see REITs has moved right back up into this pivot level, but really tightening up in here. So that's some interesting price action. Staples. continues to move higher. Really nice move over the last couple of weeks. Probably needs to take a break and, maybe go sideways or maybe even roll over a little bit. And utilities, they've been pretty strong as well the last week or so. But have they gone far enough and need to take a break? I mean, there's certainly indecisive candle on Friday, but are they going to hang in above the 200-day moving average for sure now? Even if this pulled back to this uptrend line, that'd still be above the 200-day moving average. So if there's a little pullback here, I think we could expect to see a bounce. All right, let's look at some of our plays that we've been looking at over the last week or two. Schwab is one of those. We've been watching this consolidation. It did break out of that on this would have been Tuesday, but it seems to be having trouble holding that breakout. But for now, it is holding. I don't know. It's not very exciting. So not much of a play. I think I'm going to pull that off the list now. Monster did break out. And broke out nicely and has now paused up in here, and we're into pretty much into all-time highs, I think. A pause in here, no big deal, especially this week, but we do want to see this turn and go higher. I am in this. I did play the breakout here. I am in this position, and I took a little piece off of here on Wednesday. And I've tightened my stop right up. As you can see, that red line is my stop there. If this does come back and stop me out, I will definitely keep my eyes on this for a re-entry. And if this turns without stopping me out, same goes. I may buy back that piece that the small piece that I closed out on Wednesday. Canadian Solar is one that we've been watching. We've been looking at this base on base. This is still, this is still in play. This is still doable. And like I said earlier, we've seen for a solar breakout. N phase looks ready to break out, and I think that if we see that breakout on N phase, we'll get a breakout here in Canadian Solar. And if you're playing one of them, you might want to play both. Yeah, keep an eye on both of those, N-Phase and Canadian Solar here. Because if one goes, I bet you both go. Boeing. We were watching a bull flag here, and this broke out on Friday, and it broke out quite nicely. Volume is a little bit light, but not as light as a lot of them are. One little concern, though, is an RSI divergence. I'm kind of not surprised to see an RSI divergence there. Considering that the week we've had, with it being a short week and everything, but watch out for that. That is a bit of a warning sign on this breakout, but there is strength in this breakout. There's nice momentum here, this we could definitely see this continue higher. I like the way it's kind of it's two things we've got going on here, right? We've got this bull flag, a solid bull flag here. We've also got a nice cup and handle, if everybody can see that. I didn't draw that in, but let's do that. Looks something like this. So there's your rim on the cup, and here I'll tighten that up to there. That's better. Okay. Definitely, threatening to break this. You could draw a line across the top of this, and wait for that to be broken before you enter. So we've definitely had a breakout of the handle, but we haven't broken out above the rim yet. But that is, a day away, right? So yeah, interesting play going on here in Boeing. Google, yeah, we already talked about that one. DraftKings, we were looking at a short, and that it kind of really didn't. It sort of materialized, but not. Okay, You know, we were looking at every time we've moved up into this trend line here, you know, it's pulled back hard. Well, it pulled back a little bit this time. Also on this day, I think this was Friday, Wednesday, Tuesday. There was some news, some really negative news about, you know, a hack. Some accounts were hacked. People couldn't get into or couldn't get a hold of anybody in customer service. Fairly typical with these kind of companies. But it recovered really nicely from that. So I have gone from being quite bearish on this to becoming a little bullish. I don't really see a play here. I'm still, I don't know, I think it's still a little bit sketchy, but somebody who's maybe a little less risk adverse than me might want to play either a breakout above Friday's high or Wednesday's high, or maybe above this downtrend line. There could definitely be a play in here. So I'm going to keep my eye on this and see if it sets up a little better than this. All right, some new plays. Costco is setting up nicely, and this, you know, this is one of the this is in our staples sector, and we've seen how strong staples have been. Now, I think this is probably underperforming staples. I just want to do a measure off of this low. So what is this low here? October 13th. So we're up, up 20%. Okay, since you know, these two legs up started, up 19% there. What were staples? Where are they up since that same date? Is this October 13th as well? Okay, so staples started moving up a couple of days ahead of Costco. So let's measure from the low in staples, and we only get 15%. Okay, that's interesting. That's good to see. So Costco is outperforming staples, not by much, by 4%, but still, that's something, right? So what have we got going on here? Let's get rid of that. You can see that we've had two legs up, and we are now into what could be a two-day consolidation after breaking above a trend line. I want to tighten this. Yeah, okay. Yeah, that's good. Let's zoom in a little bit here. You know, these are nice tight days, and it kind of gives you something to play off of. But what I'd much rather see is a couple of more days here inside this range. If we get one or two more days inside this range and then break out above Wednesday's high, I think that would be very playable. So I'll be watching that this week. GFS, I think we looked at this earlier. This is another one of this in the semiconductor space, and this is nice. This is a nice little base here. It had a couple of weird days breaking out to the downside of that base, but it's come right back into it, right? Let's just bring that up to that high. You know what? Actually, I want to leave that there. So obviously, you could just play a break to the upside on this. If the semiconductor ETF or either AMD or NVDA is also breaking out of their consolidations, that will add strength to this breakout. So that's potentially an interesting play. ISRG, Intuitive Surgical. This is one in the healthcare space, and this is setting up with a nice base, nice mature base here, nice and tight. You could call it a bull flag, or you could just call it a base. I like what I see here, and if healthcare keeps going and this breaks out to the upside, maybe you have to bite the bullet and just play it. What would be ideal, because it was talking about healthcare, maybe going up for another day or two and then pulling back a little bit. If that happened in the healthcare sector, and then this pulled back but held, the bottom of this base, that would be a really nice setup to me. And by the time that happens, this 21-day moving average has probably moved up to the bottom of this base. If that happened, I would buy this at the bottom of the base. Or certainly buy it if it came down and tagged a 21-day move average and then started moving up again. That would be a buy to me, and I wouldn't wait until it broke out the top of the base. I think there could be a really good play in this one. I think we just need to keep a really close eye on it. I think it just needs a couple more days to mature. Meta is another one that is surprisingly interesting to me. You know, I'm not going to play it just off of this alone, but some people would. These 2 days in here, look how tight these are. And you could play this either way. I mean, you can put a buy order, and you could just have a resting buy, you know, buy stop order above, sell stop order below. Because you know this is the really tightening up. The volatility is really tightened up here. You can see that this line here on my volume chart is the average true range percent, and I use that as a just a quick little volatility measure, right? It's really easy to see, and we can see that that volatility tightening up here now. And this has been tightening up for a while, right? It's not just these 2 days, but these 2 days are kind of the icing on the cake. I've pulled this way down to about, average true range of 3%, and that's a level we haven't seen it that tight since back in August. And generally when, volatility tightens up like that, well, volatility will expand, right? So I think this is really worth a watch, and you could play this either way. Play it long or short, whichever way it breaks out of this. What would be really awesome if we get 1 or 2 more really tight days like this. That would have everybody jumping all over a breakout, and there would be huge momentum. You just got to make sure you catch it and get in quick when it breaks out, whichever way it goes. So that is about it for our setups. Let's see, let's go back over here, take a look at our calendar for upcoming events, and we have on the 30th on Wednesday, we're going to be doing a ticker talk, and that should be interesting with all that, because remember, Wednesday is a really big macroeconomic day. It's that day we've got Powell speaking. We got a bunch of other really important numbers coming on Wednesday. So we'll definitely be taking a look at how the markets have reacted to all of that, and what we think might happen, for the next couple of days going forward, the rest of the week after that. So I think Wednesday's ticker talk session is going to be really interesting. With the look of the market, and I know that people are going to be bringing me some really interesting tickers to take a look at. We had a bunch of really interesting ones last Wednesday. So thanks everybody for watching. If you made it this far, you guys are heroes. Go ahead, hit that like button and subscribe, share if you want, and enjoy the rest of your Sunday. I can see it's beautiful here in Vancouver today. I'm gonna get out of here and go outside and enjoy this sunshine. Thanks.